All right, and welcome back to another episode of the Indy Investor Pod. Thank you so much for joining us. We are Indy investors talking Indy investing, and I got David Sterling back with me again today. And what we're going to kind of get into today, and it's our goal for this, of just kind of helping everybody helping to educate anybody on just anything really Indy real estate investing. Just everything from tips, tricks to why should they invest in Indy, and that's what we're really going to get into today. So with that, let's get on with the show. All right. Thanks for tuning in for another episode of the Indy Investor Pod. I got Dave Short and Sterling Davis with me again today. And I'm just excited to talk about this because we all do this throughout our, maybe once a day, once a week, once a month, multiple times. We do this pretty regularly. And that's really people reaching out to us and saying, why should I invest in Indy? Why should I invest or work with you and your company? We that one thing, but then it's why Indy? Why are people investing in Indy? So today, I really just want to talk about that. Maybe we can kind of give our little elevator pitches or just kind of what do we say to people when people ask that? Because that's, like I said, it's consistently that we get asked that question. So I thought it was consistent enough that we should do an episode on it. So thank you so much for joining me, fellas. Really appreciate you guys jumping on here with me again today. So Sterling, let's start with you, man. So I know you get asked this all the time. You get investors coming to you and saying, hey, I'm looking to do rentals. I'm looking to do this. I'm looking at 4 markets right now, but Indy's one of those 4. So why should I invest in Indy? What's your maybe a kind of just go-to of what you tell them, man?
I'm like a robot at this point, right? Like it's like, well, I mean, at the end of the day, Indy is great because it's stability, it's steady Eddie, right? Like, I mean, you're not going to have the ebb and flows. If you look at 2008. Big crash, like, the cities and, the towns that was hit the hardest was the ones where you get high returns and it's an up and down mountain, right? Like with Indy, it's more of it's kind of just coasting, for the most part. So for us, Indy is a place where you can invest pretty affordably, like comparable to other cities, and get a pretty good cash on cash return of 10 to 12% on average, where you're not looking for the home run. You know what I mean? You're just looking for something safe and stable. And that's why I believe in holding real estate in Indiana. It's at the end of the day, it's not Arizona, it's not California, it's not Texas. Like when those places got hit, they got hit hard because of one, the entry fee is so high to get to those places. So the amount of money that you're putting into those one places to still get the same type of percentage is just not realistically a good thing in my opinion.
Yeah. No, I completely agree. Just it's steady. That's what Indy's known for. I love the fact that you said, I think it's in all of our pitches a little bit too. Just it's that kind of steady Eddie kind of thing. And so, Dave, what do you think of like when you have that? People ask you that same question too, of like, hey, why should I invest in Indy, or why do you invest in Indy? That type of thing. What's your pitch that you usually go to for that?
Well, the thing that and it's what we adhere to and deal with is that the best thing about Indy is that every area we go in and every area that out-of-town investors can go in, there's what I call all kinds of participants. Like I can go into 38th in the Crown Hill area, and I can participate there any way I want to. I can have a rental, I can have a flip, I can do a note and a mortgage on the property, I can do a partial rehab and selling it. So almost every area that you guys work in, I can work in as a flipper. And there's a lot of them I choose not to, but it's my choice. Other people go in there and work. So I can tell, out of town people, if you go into these areas and something doesn't work, you can flip-flop your strategy and not take a bath. If you go into a certain area in Arizona, in Phoenix, you got one strategy, and you have no options to turn that into a mortgage unless you're getting a 3 or 4% yield. You can't turn that $1 million house into a rental in there like you can in
Right.
India. So you can turn, I just call it participation. You can take your strategy, whatever it is, and I can deal with Sterling, I can deal with you, I can deal with other wholesalers, I can deal with realtors, and find the strategy and fill my need. And that's we're one of the few cities in the country that you can conserve, can honestly say you can do that with.
Yeah. Yeah. No, 100%. So it's kind of funny, just in my, preparation for this episode and just kind of in my notes, I wrote down 3 words. I was like, here's the 3 big words that I put them in my elevator pitch and talk to every investor about. And those 3 words were steady. That was the one that, always pops up. The other one was variety, just what Dave was talking about. Like, we have a variety of whatever you can do, whatever your strategy is, you can do it. There's multiple exit strategies. There are different things you can do, whatever type of level you feel like you're at, you can participate in. So that was my other word. My other word is just that I want to throw in, is just affordable. That's one of the biggest things about, Indianapolis, is that it is affordable for what you are able to get for your dollar. Like, it's crazy to where, when I talk to other investors from other states, or I go to masterminds and talk to people and stuff like that, where their average, buy price is, over $400,000, or it's over $800,000 in some cases and stuff like that. And I'm like, our average buy price is like $60,000, like, or 40, that's our bread and butter is like between 40 and, $65,000. Like, what? That's crazy. And like, yeah, we do some stuff out in the suburbs too, and it gets into the 100 or 200 and stuff, but our bread and butter, that's where it is. So just the affordability of what you can really do with some things too, I think is great. And that's what people come from Indy for, when they can't afford quite to do something in their market, that you come to be able to basically able to afford a property here in Indianapolis, but you're also getting that return from it. Is that main thing. So those are that's funny that those are the 3 words that stood out to me, was like steady, variety, and affordability. Those are the things that, got brought up first. I think that's what we go with. So Sterling, go ahead.
I think the other one that's often kind of looked over, because we can complain about, because there's always something to complain about, but our laws are some of the best in the country when it comes down to wholesaling, when it comes down to even holding real estate. Now, do we need to fight to make sure we maintain those laws? Absolutely.
And do we all get frustrated by them? Yes, we do. But when you look at it, like, it could be a lot worse, because we talk about it. Yeah.
So I think it's really important, to kind of look at it. Like, I hear about Ohio when it comes down to wholesaling, or I hear about Ohio when it comes down to landlording laws and stuff that's passed. I'm like, man, that's our next door neighbor. And you can come over here, if you're an Ohio investor, and be able to invest and not have to deal with some of the issues or that you might deal with in Illinois, and some of the let's be real, the crookedness that might happen in some of these government bodies as well. So,
yeah. So, and then also too, is one of the things that always stood out to me from Indy, is just like kind of going along with kind of just the multiple things and just the affordability and stuff like that, is like kind of the ratio that there is of homeowners to people that are renting. Of like, it always amazes me of how affordable Indianapolis is, but like still how many people rent. So that kind of says something. Maybe, people do worry about that for the demographic and things like that. But I always look at it as like, it's still a blue collar town. Like, it's an up and coming town. There's a lot of good chefs. There's a lot of cool areas. There's a lot of cool things happening in Indy, but it's still a blue collar town from what I see and what I get the feel from it and stuff. And I think that's still the reason that we still have a lot of, tenants and a lot of renters here, but that comes into like, they're working hard, they're making payments, they're doing a good job with it. So, Dave, really anything else stand out to you of kind of just like why Indy? Why is it such a great place to invest?
Well, I think with Sterling's business on the property management side, and the tenants that's going in these business, Indy probably has more owner occupant potential people going into rentals. And so they're going to be there 2, 3, 4 years, and then flip to home ownership. And also the turnkey providers, the people that Sterling's work with, the tenants are getting better product. So they're being trained better on how to pay. They're being trained better on how to take care of their properties and stay in the properties where the turnovers, Sterling knows if you have a property that turns over every 14 months, that guy's going to get crushed. We have to have Sterling, how long do they have to stay before, the bringing it back to, service is, it makes sense to own a rental.
Yeah.
Is that a 3-year process or 4?
Yeah, normally, if it takes, 3,000 to turn it, plus eviction costs of 500, 3,500, that's it could be a year's worth of revenue lost, so yeah, you're absolutely right.
Yeah, and Indianapolis really has, for the most part, a really good base of tenants that lets people come into our marketplace and do well in the burst strategy and some of the other strategies out there.
Yeah.
And our low end is not as bad as some of the other low end, right? Like, we don't have the place in Illinois, Chicago, like Brittany Green or whatever, like these government controlled housing that nobody wants to walk down the street because you might get shot, right? Like, we don't really have those type of war zones. We have war zones, don't get me wrong, but like, it's not as that bad, what I mean, as crazy as that sounds, but I think our low end, when I first got this market 10, 11 years ago, I was renting, I got a house that was renting for $475 on Colorado, and now that house is $650 and I'm selling it for $60,000. I'm like, I would never have thought I could sell this house for $60,000. I was looking at comps the other day for my one on Tacoma, bought it for $25,000, 10 years ago. Now I'm able to sell that thing. That comps say I could sell it for 75. I'm like, I can sell this house for 75,000. Like, our appreciation is just is a phenomenal thing to have when you're dealing with the indie market.
Yeah, I think it comes back to, like you said, the steadiness. Like, you're not going to have those, like, it's not going to be that huge appreciation of, hey, it's this one day, and then like next year it's going to be like this huge appreciation. But that steady appreciation over time, I think, is what you can count on for Indianapolis and what it's good for. So I think it's one of the great things. And then I always come back to too. I know, and a lot of times on this show we do talk about a lot about flipping and wholesaling and property management, because that's what our expertise is in. But I look at Indianapolis too, and Dave was touching on this, and just the variety of, no matter what your strategy is, you can do it here. So if you're looking to do some land development, there's some great opportunities here within Indianapolis, or really outside of Indianapolis, for land development. Even new builds in the loop, inside the loop, outside the loop is really good. If you're doing some owner financing stuff, or you want to hold notes, do some note investing, Indianapolis is a great market for that. And then just what else am I missing, fellas? What are some of the things that maybe a lot of people don't think about, but like Indianapolis is a good market for when we're talking about some different investment strategies?
The reason Indianapolis is a pretty good flip market is, what we try not to get people to do. Like, people want to go in Bates Hendricks, Fountain Square, and they have these massive potential profits going in. But the house tends to find its leverage. I mean, you can maybe make $60,000 on a Fountain Square Bates Hendricks house, but I can almost tell you you're in that house 8 to 12 months to get that number on it. Where we can go into, the Geist area, some of the other areas in Indianapolis, get the product, and maybe we make, a good flip is $50,000 on the house. So, but when you sell it for $250 and you make $50, just the gross number's 20%, which is really, really good. Most flippers don't understand that. But you look at all the flip shows that you see in Indianapolis, that's based in California and some of the other areas, they're flipping a house and having on the paper a good return, but they're risking $700,000 or $800,000 to make that $70,000. So they're making a gross of 10% on the amount of capital that they have invested in that specific house. So it's even less, because, I mean, if we sell it for $250 and make it, we're at 25% on what we have in the house. We're in California, some of the other, Arizona, Utah, some of the other areas on the coast, they can't get those numbers, without multiple risks. So, that means in California, you're doing a $500,000 house and making $30,000 or $35,000. That's like in Indianapolis, we wouldn't do that. It's too much risk.
Right. Yeah.
So the risk is mitigated in our area because you don't have to have as much capital out to realize a fair profit on the house.
No, that's true. I mean, I think that's even on the hold side. It's very similar, like what you talked about. We're talking about most of these other cities, they're playing an appreciation game only. Like, they're like, well, I might only get a 4% cap, but my appreciation is 3 to 4 or, up to 6. And I'm like, yeah, that's great and all, but we're able to kind of play both of those on the hold side. We're able to, take a pretty friendly appreciation, but also to pair that with the idea that we can buy a house for, last year we bought a house from Brian and Emma Simple for $35,000. Our investor did. He put 20 into it, and the thing rented for $975. You know what I mean? So you're not doing that in other places and getting,
I've got a friend in Australia that has $700,000 worth of real estate. That's 3 properties. And she's hoping her goal is 2% return on the rental side of it. And she's obtaining that, but she's getting some appreciation. But, she's had 6 or 7 years, she didn't get really any appreciation, probably got some depreciation. Now it's caught back up. So, I'm telling her if she wants to do that, move to Indianapolis, we can supply her property management and we can put her in really high-end flips that looks like what she's got. She's got 3 in Australia that total the $700,000, and we can put her in 4 here that will give her a 7-8% with depreciation. So it's just weird on how things are and how good they are in all areas of Indianapolis.
Yeah, that's a fact. I mean, you're talking about, like, that's why I love the cash on cash number, right? Like, how much of that is your money that you have in the deal, and you can leverage that dollar over and over and over. And then you start playing with the idea, like, I know Simple Wholesaling, at one point you guys were doing, allowing people to do contract. Buy on contract for some of your houses. So now you're able to stretch that dollar a little bit more, where it was the one investor that came over that we talked with. I mean, this guy bought, 10 to 12 houses from you guys that was able to turn over and over, where I was talking to him, he's like, yeah, that probably would have been 2 to 3 in the market that we were going to play in. I was like, wow, that's incredible. That's pretty cool. Because now you got 12 assets, and I think they probably got double that now. Right? They're probably listening to this. They're like, yeah, actually, we have 30. So, but I just think that's a pretty cool advantage.
Yeah, and being able to do that, and then even that individual, he basically took them and just he burned them out, and that's what he did, and he just refinanced it out. We got paid off, so we were more than happy with it, and it's good to go and stuff. But then you still have the long term too, of where we can hold those notes, and that's what we do. And we have a pretty considerable amount of money that are coming into us each month just from what we're holding in notes from those properties and stuff like that. And some of these properties too, I always look at, like, what your property standpoint is like, there's really something to be done for that. I said earlier that our bread and butter is like kind of that $40,000 to $60,000 property, but also we do this with, properties that are out in the suburbs, with, properties that are in Carmel or, out in, Fortville and Fishers and things like that. So you can do it with a little bit of everything. And I think a lot of times when we have these conversations, we kind of focus on, some of the areas that are downtown and things. But I think as far as what you can really do, you can do it throughout the entire city, inside the loop, outside the loop. It just depends on whatever your strategy is and whatever you feel comfortable with number wise and stuff. Dave's talking about this, this lady in Australia that has these 3 properties for, $700,000 of, like, you can buy some, 4 solid rentals out in Fishers for that and have great cash flow coming in. And those tenants are probably going to stay for like 4 or 5 years a lot of times and stuff. And you have just the stability in that is great here in Indianapolis. I know one of the things that always stands out to me too, when people come to Indy, they are always surprised at, like, how easy it is to get around. And that might sound like something small, but it ends up being a pretty big thing of, like, if you have multiple investments and you want to come and check on them, you can literally drive. You could have 20 investments around Indianapolis. You can do that and then have, you do that before lunch a lot of times within this market and things like that too. And that goes a long way when people are looking at like, hey, I want to be able to check on stuff. I want to be able to look at stuff. I want to be able to, have a feel for the city. I think that's a great thing. So.
No, absolutely. I think that's the I will say this though, as an investor, like, get your own car. I'm not picking you up from the airport. Like, just know, like, we used to, like, we just have these people like, hey, all right, I'm at the airport. I'm like, oh, okay. Like, they're like, you're not picking me up. I'm like, no, get your own car. Explore, Indiana. Like, have some fun. Like, I think it's important, build out your schedule so that it's so many different people that you can meet in this. And we have so many cool, Cyria is definitely a benefit as well. We have the largest RIA here in Indiana that has over, 600, 700 members that you're able to obtain, outside of COVID, that you can network with. I think Indy's a very easy area to build your team. I think there's so many different resources that you can pull from to build your team. I think, at the end of the day, you have to build a team that is diverse, but it's specifically, it works for you. I don't think every team works for everyone.
Yeah. And one of my last little notes I had on here, and I think it's definitely worth bringing up is, and I think this is a huge benefit to Indianapolis and why I really enjoy investing here is the investor community. I really do think that, like, for the most part, everybody looks out for each other, willing to help each other out. I'm pretty, we're friends with a lot of our biggest competitors, and I don't even feel like they're competitors. They're colleagues, they're peers. That's how I view a lot of people. But I feel like a lot of people look out for each other, whether that's in-state investors, out-of-state investors. There are some people that, obviously that doesn't apply to and things like that. But for the most part, I'm very happy and proud of, like, the Indy investor community and how they communicate, how they talk, how they look out for each other. And I think that goes a long way, whether it's online and social media and Facebook groups, or, through something like Cyria, or, any of those things. I think it's great for what Indy has to offer, but then also the community that comes along with it is, I think is pretty up there. I know I talk to a lot of, investors from other communities, and, I might have a wholesaler reach out and be like, hey, can you help me with, finding, can you help me with wholesaling and stuff? Yeah, I'm more than happy to, but we only deal with Indianapolis. And I'll tell them, one of the first things, you need to find a mentor, somebody that's, doing it. And they're like, oh, no other investors will talk to any other wholesalers. Like, they don't want to talk to us. They don't want to help us, things like that. I don't see that here in Indianapolis. I feel like everybody is very helpful and kind and pretty, they have a good heart, because we do want to protect our city and kind of what's going on with it, which I think is a huge benefit. So.
Oh yeah, I think that's what I love, man. I somebody took one of our listings yesterday and started trying to wholesale, right? Like, within like 2 minutes. I mean, 2 minutes, my phone blew up. Boom, 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 boom. And they posted it on Facebook. Sterling, I'm like, all right, guys, got it. Thanks for looking out, right? Like, it just shows, like, one of the people that hit me up was Steve Lehman. He's like, hey, man, we got to shut this down. I was like, yes, we do, Steve. Yes, we do. We got to hold them accountable. I was like, yeah, man, we do. Like, but it's like his passion and, all the people that hit me up. I was like, man, that's what makes Indy investing really cool, though.
Yeah. I feel like Steve, he's like the unofficial sheriff of, like, Indianapolis investing and stuff. So that's cool. So before we get out of here, Dave, do you have anything else that I kind of just share or put out there too, of just like why Indy is such a great market to invest in?
Well, Indy is almost what I call slated. It's like, if you want a solid, no management hassles portfolio, then you can go here, here, and here, and here. But if you're that guy that wants a 15% return on his money, this is where you're going to go. But your management better be really, really strong to get that. And I said, you can't, if you want somebody to manage that portfolio and get you these returns, it's not a normal management fee. It's a higher management fee to do that, because, you're paying them for a lot more work. But you can literally scale Indianapolis and get the return you want based on the area that you'll take. But the beauty if you decide to go into what I would call war zones, might be different than Sterling than you, then you're probably going to get good appreciation. And in 4 or 5 years, that area is going to turn. So for you dealing with all these headaches today, you'll probably be very well rewarded in 5 years for, staying there.
Awesome. Love it. So Sterling, any last thoughts from you, man?
No, man, I think, what we've said is true. I mean, the indie market is just such a good place to build a community. I mean, if you want to be part of a community of like-minded people, I think that's the beauty. Like, like you said about, wholesalers is your competition. Like, same with property managers, man. Like, we kind of all work together. We all protect each other. We all believe that, like, competition breeds excellence, you know what I mean? And we're all different, though. You know what I mean? We're all so vastly different on what we focus on, and I think sometimes investors don't realize that. So I think as you come into this, like, you can start picking and using different people to fill your gaps. And I think that's, if I was going to be an out-of-state investor, I think being able to be part of a very transparent community, it would be a relief.
Yeah. So awesome. Well, thank you so much, fellas. That's what we have for you today. Just Indianapolis, why it's such a great market. The three things that really stand out. It's steady. You have such a variety of what you're able to do here, and it's affordable. And you're going to get that return. So thank you so much for joining me. Like I said, thank you so much for listening. If you have any other, if you want to reach out to us in any way, please do that. If you have any questions, any comments, anything that you would like to, maybe shows that you'd like us to do in the future, feel free to reach out to me at brian@simplewholesaling.com. Dave, give you out your contact information real quick.
Best way is hit me up on email, dshort@c21sheets, SCHEETZ, or stop by the Irvington Event Center, 6767 East Washington. I hang out a lot there.
There you go. It's a great space. Sterling, how about you?
Yeah, Sterling Davis with Ethosty Property Management. You can just go to our website, Ethosty, ETHOSITY PM.com. Hit me up. I'd love to talk and chat.
Awesome stuff. You can also find us all on social media, on Facebook, and Dave's pretty prevalent on TikTok and stuff like that. So you can see him on there.
He's doing dances and stuff.
I owe you some money. I'll just Venmo. I said, what the hell is Venmo?
He said, I already had COVID. I don't need Venmo.
Yep. Thank you so much for listening, and we will see you guys next time on the Indy Investor Pod. Take care.
Yeah.